What I learned from our last Intel video that we released last week is that people love it when you're wrong. And probably when I'm wrong too, but I think people really love it when you're wrong.
This is true.
So we're making another video about being wrong, but maybe not in the way you think.
Sort of. We did a 3-part deep dive over a year ago after Nvidia had an entire segment of its GTC keynote about co-packaged optics, including talking about Coherent and Lumentum. And we were wrong by not immediately buying Coherent and Lumentum that day after we did the 3-part deep dive.
Before we get into all of that, I want to give a shout out to our friends over at Fiscal.ai. They still have a sale going on until Thursday, the 14th of May. You can get 25% off any paid plan with our unique link, fiscal.ai/CSI. 25% off only happens twice a year. So if you've been considering it, make sure you check it out. Link in the description below. Let's take some time to review Lumentum, and you're going to see a number of slides from Fiscal in this episode. Lumentum, an integrated device manufacturer primarily in the optical networking portion of the industry. And if you haven't seen it yet, we'll link a video right here that we did about Lumentum just recently. But here you can see the massive increase in revenue that has happened, and it is expected to continue happening over the next quarter.
90% increase in revenue in fiscal Q3. That's basically corresponding with Q1 of calendar year 2026. And the expectation at the midpoint for the fourth quarter of fiscal 2026, which will end at the end of June, here in another month and a half, more acceleration in revenue. Triple-digit increase is expected. And interestingly enough, this is still not even including the big co-packaged optics, CPO, and some of the related products that are expected by the December 2026 quarter. That will be fiscal year 2027 for Coherent later this year. A lot of this massive outperformance is simply just that there's not enough manufacturing capacity for laser modules and parts and pieces, especially for scale out and scale across lasers. So Coherent and Lumentum really just performing exceptionally well as they fill up their fab capacity after many years of market consolidation that both of these companies engaged in.
I liked how you didn't use the word bottleneck in describing that.
Why did you have to use the B word? We were going to get through this whole thing without using the B word.
Google reads the transcripts and they need to hear bottleneck for our videos to get recognized.
Fair enough.
Also, choke point.
You crammed them all in. Let's see what bottlenecks and choke points do for a company that had idle fab capacity and now suddenly does not have any idle fab capacity.
All right, here is Lumentum's operating margin in purple, their diluted earnings per share, that's the green line, and then their free cash flow, that's the red bars. So you can see operating margin, expansion, earnings per share growing rapidly as well, and they're starting to tick back up on their free cash flow.
Yeah, and as we discussed earlier this year, operating leverage does work both directions. You can see the negative margins that Lumentum had to work through during the bear market over the last couple of years, but now that is very much reversing. They are at all-time highs as an independent company and probably headed to brand new all-time highs as 2026 progresses, and probably into 2027 as well. At least that's how it appears up until this point. However, let's take a moment here and just talk about some other items, because true conviction in a business isn't just talking about all the stuff that could go right. Let's point out one item that needs called out that could be a potential headwind for Lumentum.
This is Lumentum's balance sheet. In blue, you have total cash and cash equivalents. You can see they had a big jump in the most recent quarter. Nvidia invested $2 billion in Lumentum, so they had that big jump in cash. Long-term debt is in yellow, and then current portion of long-term debt in pink. What that means is debt that is coming due very quickly, current debt. And as you can see, in the December quarter and March quarter, all of that long-term debt is now due. It's becoming current debt. Why is that?
There are a few items here that we need to unpack, double click on, add some color. The first is Lumentum did raise a bit of cash a couple of quarters ago by issuing some new debt. And one of the first things they did was Other integrated device manufacturers' pain can be Lumentum's gain. Qorvo is currently in process of merging with Skyworks Solutions. Qorvo had way too much manufacturing capacity. They are selling another one of their fabs in North Carolina. Lumentum is the beneficiary of that. So they are making this small acquisition. This capacity will be ready within the next couple of years for indium phosphide, INP. So that's one item. That's where some of the more recent debt came from. Interesting note here, Casey, you just mentioned Nvidia made that $2 billion investment in both Coherent and Lumentum. Nvidia making a lot of investments in optical manufacturing capabilities. This one just announced last week with Corning to make a pretty extensive expansion of fiber optic cable manufacturing in the US. So Nvidia continuing to put its hands all over the supply chain.
But let's go back to that debt. How are they going to be paying off that debt that is now owed immediately?
Well, as this chart shows you, they are going to be doing it by issuing new stock. You've seen a big increase in shares outstanding the last 2 quarters. And in fact, over the next couple of quarters, we fully expect that there's going to be something to the order of about a 20% increase in total diluted shares outstanding. We superimposed the stock price on top of this chart for a reason. The stock price is, unfortunately, the reason why this dilution is suddenly happening, why Lumentum is suddenly having to deal with this debt. And related to that, the shares outstanding are on the rise.
And why is that? Well, Lumentum needed some cash, so they needed to take out some debt, and they did this when the stock price was not $1,000 per share.
Yeah, when it was 10x less than what it is now, more or less.
So explain to us a little bit about convertible notes.
Okay, so convertible notes, it's a debt instrument. It's really actually a type of equity financing because it's debt that will convert to stock if the stock price meets certain milestones. And the top portion of this chart, which we took from the last quarterly report, you can see all of the debt essentially is convertible debt. And the milestone, we're hell and gone from the milestones that had to be reached for this debt to become convertible. In the matter of about 6 months, all of the convertible debt is now eligible to be converted into stock at a very, very generous price for the owners of that debt. And now that the stock price is well over $1,000, this is why we often talk about debt being very expensive upfront for a company in need of financing. But over time, as the business scales up, it's very cheap. Conversely, equity financing is very, very cheap upfront. But if the business scales up over time, it becomes very, very expensive. Because Lumentum chose convertible debt, a type of equity financing, this has now become a very, very expensive type of financing because, yes, they had close to 0% interest rate to service that debt, but now it's all going to convert into stock. And so if you're an existing shareholder, this is something you need to be mindful of as 2026 progresses.
Now, this is all fine and well if this trend continues right here. We'll go back to this slide with the operating margin, earnings per share, and free cash flow. If Lumentum is still able to drive that revenue up, expand their margins, that share dilution may not be as big of an issue.
You kind of just gloss over it.
So just something to keep in mind if you're a Lumentum shareholder. And a good lesson for us, one of the mistakes that we made in our most recent investing journey, not buying something when we knew it was going to happen.
Or maybe just buying first, asking questions later.
No, that's not a good lesson.
That's probably true.
Go back to saying you're wrong because I think people love that.
I was so wrong.
There you go.
Co-packaged optics to the moon, Lumentum to the moon. Yeah, hell yeah, get you some Lumentum stock.
Okay, that's too much.
Oh, I think it needs to stay in there.
All right. If you're wondering what to watch next, we're going to link a video right here about networking.
AI data center networking from December 2025. I wish there was someone out there to tell us about these stocks before they rip higher.
In case you missed it, here it is. Check it out. Watch it now.